RZLV emerges as a potential 10 times opportunity in 2026. The current fear regarding the death of SaaS is actually well-founded because the old model of charging per seat for software is becoming obsolete as AI agents replace human workers. However, Rezolve AI is not a traditional SaaS company. It is an infrastructure play built for this exact shift. While giants like Salesforce are struggling to justify why a company should pay for 100 licenses when 2 AI agents can do the work, Rezolve is building the actual brain that allows those agents to execute transactions. This distinction is critical because Rezolve operates on a transaction and outcome model rather than a seat-based one. They are not just selling a tool, they are providing the essential infrastructure for agentic commerce. Their moat is significant because while most AI companies are simply wrappers around ChatGPT, Rezolve has built proprietary connectivity into retailer backends, including inventory, payments, and logistics. If major players like Google or Amazon want to enable true agentic shopping, they will need the plumbing that Rezolve has built to connect their AI to actual product catalogs. This positions RZLV not as a victim of the SaaS crash, but as the solution to it. The fundamental shift here is from software that merely assists humans to software that actually performs the work, and Rezolve is at the forefront of this revolution. By providing the critical infrastructure that links AI agents to real-world commerce execution, Rezolve is effectively building the railroads for the next era of digital trade, making it an indispensable asset in a world rapidly moving towards autonomous economic agents. Rezolve AI is effectively positioning itself as the Palantir of commerce, becoming the operating system for global retail, just as Palantir did for government data. Their technology, dubbed the Brain Suite, is light years ahead of the standard chatbots currently flooding the market. First, there is Brain Commerce, which replaces the archaic method of static search bars and filters with a conversational discovery engine available in 95 languages. Instead of a user ticking boxes for size and color, the AI understands context, empathy, and intent, guiding a shopper from a vague idea like needing a gift for a niece directly to a purchased item instantly. Then there is Brain Checkout, which addresses the massive industry problem of cart abandonment that currently sits at nearly 70%. Rezolve calls this instant salesware because it enables one-click purchasing directly within the conversation, bypassing the clunky, friction-filled traditional checkout flows that kill conversions. By using smart autofill and personalized engagement, it closes the deal immediately. Finally, the Brain Assistant offers 24/7 global support that handles complex queries in real time across nearly 100 languages, only escalating to humans when absolutely necessary. This is the true realization of the services software model, replacing entire call centers with intelligent agents and proving that Rezolve is building the engine for the future of commerce. This suite of tools represents a comprehensive overhaul of the digital shopping experience, addressing the most significant pain points for both retailers and consumers. By streamlining discovery, checkout, and support into a single, cohesive, AI-driven ecosystem, Rezolve is not just improving existing processes, they are redefining what is possible in e-commerce. The ability to handle complex, multi-turn conversations and execute transactions seamlessly across languages and borders gives Rezolve a competitive advantage that is difficult to replicate, further solidifying its position as a leader in the next generation of commerce technology. From a technical analysis perspective, the charts are screaming that the selling pressure is exhausted, and we are looking at a classic bear trap setup. Despite the broader market panic, RZLV has established a rock-solid floor at $2.51, where buyers stepped in aggressively during the last session. The stock is currently hovering around $2.60, and the key pivot point to watch is the volume-weighted average price at $2.62. A reclaim of this level with volume would be the trigger for a massive Green Day explosion, opening the door to targets at $2.77 and eventually a major gap fill up to $3.02. Furthermore, there is a massive potential for a short squeeze. With short interest estimated to be around 18 to 20% of the float, the bears are currently trapped in a crowded trade. They have been betting on bankruptcy, but Rezolve has recently raised capital, effectively killing the bear thesis. If the stock holds the 251 floor and pushes past 262, we could see a violent squeeze higher as shorts rush to cover their positions, fueling a rapid price appreciation that retail investors can ride to significant gains. This technical setup provides a compelling entry point for traders and investors alike, offering a favorable risk-reward ratio. The combination of strong support levels, a clear breakout trigger, and the potential for a short squeeze creates a powerful catalyst for upward price movement. Additionally, the recent capital raise not only removes the immediate threat of insolvency, but also provides the company with the resources needed to execute its growth strategy, further strengthening the bull case. As the market begins to recognize the disconnect between Rezolve's fundamental value and its current stock price, we can expect to see a significant repricing of the asset, driving shares higher and rewarding those who had the foresight to buy when others were fearful. The potential for a 10 times return exists because we are at a pivotal moment where smart money is finally starting to differentiate between the dying seat-based SaaS models and the booming infrastructure AI plays. Rezolve fits perfectly into the latter category. Unlike legacy companies that are burdened with pricing debt and have to cannibalize their own revenue streams to switch to AI, Rezolve is native to this new model and carries zero legacy baggage. This makes them a prime acquisition target for big tech players who desperately need to fix their broken commerce models and integrate backend connectivity. The SaaS apocalypse is effectively an asteroid that is killing the dinosaurs of the industry, but Rezolve is the resilient life form that thrives in the aftermath. The current price is artificially suppressed by temporary dilution and sector-wide fear, offering a rare entry point near historical support that we may not see again. The strategy is clear. The buy zone is between $2.51 and $2.60, with a breakout trigger above $2.62. The immediate target is $3.02, but the long-term potential is firmly in the double digits. This is a strong buy for the contrarian investor, ready to capitalize on the market's misunderstanding of the future of AI commerce. By investing in Rezolve now, you are essentially betting on the future of how goods and services will be bought and sold in an AI-driven world. The transition from human-centric software to agent-centric infrastructure is inevitable, and Rezolve is positioned to be the primary beneficiary of this shift. As more institutions and investors wake up to this reality, the demand for RZLV shares will likely skyrocket, driving the price to new heights. The opportunity to get in on the ground floor of such a transformative technology is rare, and those who seize it today stand to reap substantial rewards in the years to come. Do not let the current market noise distract you from the underlying signal. Rezolve AI is building the future, and the market is just beginning to catch up.